Hi, and welcome to this week's look at the main stories that have affected the market so far and potentially will carry on to do so. And we're going to have to start, of course, with something about the default. And strangely, that's what about the default? British pound is down versus the US dollar. Now, obviously, there are still multiple concerns around regarding the default, and there's lots and lots of talk about it, some of it quite contradictory, which we'll come on to in a minute. However, Monday saw a further fall in sterling against the US dollar. It started at the end of last week, and Monday morning we saw the second lowest point over a 30-day moving average on a weekly chart. Now, considering British debt to GDP ratio is far lower than the US, it's a little bit of a surprise, particularly with the US having this debt crisis hovering over them. Now, we do have higher levels of inflation in the UK, but is that all it's about? So overall, things do seem to be a little bit calmer in the UK. Lower to GDP ratio and, no banking crisis. So what's going on? Well, there's a school of thought at the moment, and that's that there won't be a default. We have seen some pretty strong language used and some of the quotes coming from top people such as Janet Yellen. But some people are saying that they're just created for fear and to drive an agreement forwards, and that a last-minute deal scenario has been planned all along. So the US, which is a country that is typically run on debt, may just effectively print more money. And whilst it's not their usual way of doing something, and the country does operate pretty much on finance, that this may actually lend a little bit of stability. If we look at that, one of the comparisons being used to show how the US sort of traditionally runs compared to other countries is major purchase such as a new car for a US household. People don't necessarily look at the overall price, they will look at what is the monthly payment. So it's a slightly different way of thinking. So it's definitely possible that analysts and traders are taking the view that there will be a deal, and that a view that increasing the national debt just a normal thing to do and just carry on. But it's slightly contradictory to some of the other stuff we're going to say, which probably illustrates how difficult it is at the moment to really get a grip on which way the markets are going. Well, we're currently looking at sterling against the US dollar at around 1.2368. That is below the Jan and February highs, and we are potentially at the moment looking at a new monthly low. Nobody's quite sure what's going to happen, so risk management and money management techniques are going to be key over the coming days and the next week or so. So, sterling's down. A little bit of further bad news, I suppose, for the UK. It's the FTSE dropped rapidly to April lows. So yes, we have sterling down against the dollar, and Wednesday morning saw a significant fall in the value of the FTSE 100. It opened at 77.62.95, low on the day of 75.90.24, and in fact it closed at 76.27.1. This morning, or sort of lunchtime now on Thursday, we're looking at around 76.06. It's fair to say inflation is remaining a concern, despite the figures that we had out, and the main figure, if you like, dropping below 10% for the first time since last August, and in fact its lowest since March 2022. But it didn't fall quite as dramatically as expected, and it's worth looking at some of the underlying figures that go into the overall inflation figure. And if we take a look at that, it's not great news for UK households, with food inflation currently at 19%. Core inflation was actually up on the month from 6.2 to 6.8%, and that's the highest for around 30 years. So whilst, it's come down, that's great, not quite as good as we'd hoped for. So market participants are now expecting further interest rate increases as soon as the next meeting, probably at least 25 basis points. If we have a quick look at the chart does show a series of bull failures around some psychologically significant levels. One, it failed to settle above 8,000 back in February, and I remember talking about, we're hitting 8,000 and are we going to stay there? Is this a resurgence? But then it also failed to fix above 7,900 in April. And 7,800 was seen as support, but now seems to be operating as a level of resistance. The current price action doesn't bode particularly well either, and it may well suggest that 7,700 is now resistance as well for further increases. If the downtrend strengthens, the FTSE may decline within its channel, and that's what we're seeing in blue on the chart. And In fact, it may reach its median line or even the lower border, which would equal a 2023 low. So fair to say inflation weighing pretty heavy on the FTSE 100. So we've had a look at sterling, we've had a look at the FTSE, both down, US dollar up against sterling, but it's not all rosy. And this is where I was talking about some form of contradictory information earlier. The Dow Jones has hit its May lows. Now, the Wall Street 30s, as we call it, as many firms do, fell below 32,800, and it's currently there or thereabouts as well. And it's pretty much to do with the national debt ceiling default fears. So we've spoken about the dollar. Perhaps people think, oh, well, there's going to be a deal anyway. But clearly there are still fears there. And there is a significant portion of investors that have genuine concerns. In fact, Fitch has placed the long-term AAA rating for the Dow Jones into review. That's quite a significant move. JP Morgan, despite the most expected scenario is an increase in the ceiling, are putting the risk of default at 25%, and that's increasing every day. Now, the Dow Jones, or the US 30, is definitely weaker than the tech indices, that's for sure, mainly down to the AI boom that they're experiencing. And in fact, if you look at something like NVIDIA, big chip maker in that space, they're up 25% to $380 a share. Now, if we have a quick look at the chart for the US 30, it shows that the value has fallen into the lower zone of the channel it's been in since November 2022. Default anxiety continues to build, then we could see a continuation of the decline within that short-term channel, which is in red, and that would take us down towards lows of the year. So dollar, yeah, that's up. It could be because everybody's thinking there is going to be an agreement, and yet the Dow Jones in a similar time period is down because of concerns over exactly that. It's a difficult time in the markets, and again, risk management, money management need to be at the forefront of all of your trading decisions. There's so much conflicting information and opinion out there, to be sure, and we wish you good luck. And finally, we're going to take a look at an individual stock, and as I mentioned before, obviously the Dow Jones suffering concerns, with regards to credit default, etc. Dollar up because there is going to be a deal, who knows. But AMD share price breaks the August 2022 high. It actually happened towards the end of last week, and since the beginning of 2023, the share price is up 66%, significant rise. Analysts at the Bank of America say the share price has a bullish outlook. That's despite them downgrading the stock just 2 weeks ago. And a Wall Street Journal analyst poll shows the target price is $102.68 per share, which is actually below the current level. It closed at 108.27 on Wednesday night. So what now? Well, if we have to take a look at the chart and do a little bit of technical analysis, the following could be barriers to further rises. Now, 109.42, that price, that's 50% of the decline from A to B. We've also got a psychological level of $110 per share to sort of counteract, and the upper line of the ascending channel, which we're showing in blue here. And also, of course, the US debt ceiling, although, as mentioned previously, the tech indices seem to be doing a little bit better than the Dow Jones, for example. So this AI boom perhaps negating some of the fears of a credit default. But if it does, the share price does pull back, say, to the lower border of the ascending channel, that's not necessarily a massive surprise. But as I say, there's a lot of uncertainty in the markets at the moment. There's conflicting views about, we've mentioned already, dollar's up against pound, the Dow Jones is down. So nobody is sure. It's a difficult market to navigate at the moment. And, 1st of June seems to be the key here. So over the next few days, do be very, very careful. Again, I don't want to sound like a broken record, but risk management, money management techniques need to be in play. Good luck for the week ahead, and we'll see you next week. Bye for now.